you, Evan. Now, what are accounting and tax differences in the context of legal political environment in international trade? Okay, so despite some differences in regional or municipal laws within a country, overriding national laws link a whole country together. So different countries adhere to various treaties. That's truly correct because we have what we call sovereign entity. When it said sovereign entity, we have our own laws and political systems. Basically, these laws dictate us, the businesses rather, and how they can exist, how they can be organized, their tax liabilities, the minimum wages they must pay to employees, and how much they may cooperate with competitors, and how they must price their goods and services. Now, companies that do business internationally are subject to the laws of each country in which they operate. So, when laws differ greatly from those at home, a firm may encounter substantial operating problems abroad. And differences in taxation practices from country to country exert a huge influence on both the strategies and tactics of multinationals. Now, let's take a look at the gap between accounting and taxation. Flash at the screen is the summarized one. So, in accounting, the basis is accrual basis, and in tax, it's principally cash basis. So, accrual basis, it means that you will record revenue when it is earned, not when it is paid. But on tax, you will record it when it is paid or when it is received. So equations under accounting is revenue minus expenses will get accounting profit. That in tax, when we deduct the taxable income to tax deductions, we will get the taxable profit. Okay? So accounting profit does not equate taxable profit. And there could be differences because of the difference rules that we can apply in both accounting and taxation. Now, let's talk about the significance of accounting and taxation. So basically, they have the same role, and that is to provide us the information for the financial statement so we can make better decisions. And it will also help us track income expenditures, ensure statutory compliance, provide us with our government and quantitative financial information, which could also again be used in deciding. Okay. Now, moreover, we also have to talk about the globalization and its effect on the movement of goods and services. So, as globalization increases, the movement of goods and services across political and cultural borders and the movement of financial resources across borders also increases. Okay. Now, borrowing and lending across borders is growing. Cross border stock ownership is growing at an even faster pace as companies seek equity capital in foreign countries as well as in their home country. So there is a growing culture of equity ownership throughout the world as developing countries experience economic expansion and more developed countries seek to privatize many economic entities that were owned by the state. So these trends require accounting information that is useful as it crosses political, cultural, and geographic boundaries. So just as cultural, political, linguistic, and economic factors that differ from one country to another, let us try to check on the differences of taxes. So, because accounting information can sometimes add to this difficulty. You get it? Now, no two countries on earth have exactly the same set of accounting rules to produce financial statements. And these differences were caused by good reasons, notably. First, the differing sources of external financing. Second, differing legal systems. Third, various political and economic ties. And fourth, the varying levels of inflation. Five, the varying levels of economic development. And sixth is the cultural differences. Now, there are four strong forces at work, however, to mitigate the effects of accounting diversity. And notable is the work of the International Accounting Standards Board. Oh, let me go back to that. Okay. International Accounting Standards Board is an independent international body, and it has put together a set of accounting standards known as the International Financial Reporting Standards here. Okay. This becomes widely accepted throughout the world as an alternative or sometimes even a substitute for a nation's own domestic accounting rules. Okay. The European Union, as of 2005, has mandated that all companies listed on a stock exchange uses IFRS. IFRS are becoming acceptable in many other countries throughout the world as well. And many accounting bodies throughout the world have publicly stated their intention to converge with IFRS in the near future. So, talking about in the Philippines, do we really conform on the accounting standards, just like here, flash on your screen, the International Financial Reporting Standards? Well, let's see. Absolutely yes. Okay, we conform our accounting standards to that of the IASB. The IASB, that stands for International Accounting Standards Board. Accounting standards in the Philippines are adopted from the International Financial Reporting Standards issued by the International Accounting Standards Board. And the IFRS is a set of accounting standards that are recognized by at least 120 countries, and that includes Philippines, of course. And it provides a guide on how particular types of transactions and other events should be reported in financial statements. And you'll be asking yourself, why do we incorporate such? The rationale for that, it's because the IFRS, or the Philippine Financial Reporting Standards, used to ensure consistency in recording, recognizing, and measuring transactions, financial in nature, which it allowed. If we are going to follow it properly, we will surely stabilize and we will be transparent throughout the financial reporting process of the company. So these standards are not enforceable as compliance because it's voluntary. Okay. So does this mean that there is no modification in our accounting standards in the Philippines? No. Okay, that's no. The PFRS, or version of the IFRS, which has some minor modifications, and the Philippine accounting standards are issued by the PFRS Council, and it's formerly known as Accounting Standards Council under the oversight of the Board of Accountancy. Hence, the PFRS and the PAS, or the Philippine accounting standards, are our current set of general accepted accounting principle. Now, what is generally accepted accounting principle? This vary from country to country because we have different legal systems, we have different level of inflation, culture, degrees of sophistication, and the use of capital markets and economic ties with other countries, right? So entities registered with the Securities and Exchange Commission, like the corporations and the partnerships, they have to be registered in the SEC, and they are required to apply PFRS as their financial reporting framework. So the PAS, the Philippine Accounting Standards, just to give you a hands up, it corresponds to the adopted international accounting standards, while the PFRS, the Philippine Financial Reporting Standards, it corresponds to the adopted International Financial Reporting Standards. So previously, standards issued by the ASC, or the Accounting Standards Council, were designated as Statement of Financial Accounting Standards. Okay, if you want to check on it, just go to Philippine Accounting Standards, and it was perfectly shared by Attorney Dennis B. Funa. Okay, now, in addition to accounting diversity problem, is there any issue aside from that? Yes, of course. There are several other accounting issues multinational organizations must face, and these are the use of different currencies and the different tax laws and rates in different countries. Multinationals must aggregate the financial statements of their various subsidiaries throughout the world to produce a single consolidated set of financial statements, including issues arising from the use of different currencies and such. Multinationals must also deal with the different tax laws and rates in different countries and often attempt to minimize their worldwide tax liability. So this situation becomes even more complex when one subsidiary of a company buys or sells a product or service to another subsidiary of the same company in a different tax jurisdiction. Okay. So countries, we have our own legal mechanisms to ensure that we receive a fair portion of the tax revenue, perhaps. Now, let us go to the corresponding diversity in tax systems and rates. Okay. Just as multinationals are forced to cope with the staggering diversity in accounting customs and regulations, there's also corresponding diversity in tax systems and rates in virtually every country on earth. A nation's tax policy is set by the government, and the tax law of a particular country is a product of the economic and social codes and circumstances of that country. So a multinational must file a tax return in that country that it operates according to the laws and the regulations of that country. And the existence of the two different inherent limitations of taxation as are follows. We, as accounting students, we know that there are inherent limitations in taxation as one of the powers of the state. And there are two, the territoriality of taxation and the international comity. So when we said territoriality of taxation, the Philippine government cannot enforce tax obligations to those subjects outside its territorial jurisdiction, as this would result in encroachment of sovereign or foreign sovereignty. Sorry. That is why we cannot enforce taxes, those export taxes, because the consumption is, especially when the consumption is within the Philippines, we cannot tax the export when the consumption is going to be inside or within the Philippines. Now, for the International Committee, in the UN Convention, countries of the world agreed to one fundamental concept of co-equal sovereignty, wherein all nations are deemed equal with one another, regardless of race, religion, culture, economic condition, or military power. So it is by this principle that each country observes international comity or mutual courtesy or reciprocity between them. Okay. Now let's move on the tax minimization strategies. Okay. The desire of multinationals to minimize the taxes they pay worldwide, it undoubtedly enters into decision making in a significant fashion. So multinationals produce a product in one location and they will sell it in another, and it will really result in an ability to choose the tax jurisdictions in which they perform various operations. Okay, the different taxes that we have, we can actually minimize it. It's perfectly legal, but tax evasion is illegal. Take note of that. So we have tax minimization strategies in order to minimize the worldwide taxes they have to pay. So some of them, it includes tax credit, this one, tax treaty, tax haven, and international transfer pricing. So when we talk about tax credit, that is a mechanism to mitigate the effects of a worldwide taxation philosophy on multinationals. When tax treaty, it's imposed between nations, and it is established which items of income will and will not be taxed by each local taxing authority that is partly party to the treaty. For example, international agreements that we have, that is one way of minimizing the tax we have to pay. Tax haven, on the other hand, it is used by multinationals to shift income from a high tax country to a low tax country. So tax haven, they are sometimes used by multinationals to shift their income from a high tax country to a low tax country. That's the purpose of tax haven. And then now the last one of methods in minimizing the taxes is international transfer pricing. So this is a final method for reducing worldwide taxes. And this is done through judicious use of transfer prices. When you said transfer price, this is the price charged between organizational units of the same company. Internationally, the transfer prices is a price paid for the transfer of goods and or services between two subsidiaries of the same multinational corporation. So basically, these transfer prices can occur both goods and services. Many multinationals produce a product in one country and then they were going to sell it in a second country or charge a subsidiary for some type of service the multinational may provide. Thus, the transfer prices occur even if no actual goods cross borders. So, example of that, I gave two examples. McDonald's in the United Kingdom pays a transfer price for royalties. And United Parcel Company in Germany pays a transfer price to lease airplanes from United Parcel in the United States. There is a price that is charged for that good and services in the same company. So what's the catch? What's the catch for this one? What's the purpose or what can we get out from that? It gives multinationals an incentive to shift taxable profit to low tax rate jurisdictions using transfer prices as a mechanism. Labor laws or labor legislations is the body of laws, administrative rulings, precedents which address the relationship between and among the employers and labor organizations, often dealing with the issues of public law. So in the Philippines, we have our own labor code. Now, why do we need it? Why do we have to incorporate labor laws? Labor laws are crucial for the smooth operation of the businesses. Do you agree? Yes, I'm sure all of you agree. It clearly clarifies and stipulates the business obligation to the employees. And there has been a long history of labor laws advocating for the full protection of a worker's rights. We can find labor posters in almost all organizations to remind employees of their rights. To some business owners, the laws could be seen as bureaucratic, but they are meant to keep employees safe and protect in the work environment. Who wants to work in a safe work environment, right? I think all of us wants to experience such thing every day. Now, how labor laws have changed your workplace. So again, why do we need it? Classification of workers. Labor laws help classification of workers depending on the job environment. So the labor laws are very strict in the classification of employees and it prohibit companies labeling employees as independent contractors in an attempt to save money. So these laws ensure that employees are not burdened with heavy taxes. So there is always a big concern about the difference of this one being an employee and a contractor. So we can always have the control. If you're our employer, we can control when and how the person works. So they should be definitely classified as an employee. In that case. Now, for child protection, this is one of the most important rules of labor law. So the Federal Fair Labor Standards Act doesn't allow the employment of children under the age of 14. So there's also a clear regulation on the hours, which children 14 to 16 can't work. And employers should be vigilant about the law, especially when it comes to dealing with children. Third, it's for wage protection. So according to the FLSA, the federal minimum wage is set at $7.95 an hour as of 2918. This is in the US of A. So the minimum wage laws could vary from one state to another, but the federal rate is the bare minimum. So it should be noted that in the Philippines, we are also protected in our wages, right? The minimum wage we set are not taxable to income tax because it is a tax exempt. Okay, so that we will not be heavily burdened as minimum wage earners. Okay, reasonable hours and compensation. Employers had the right to force workers to work extra hours without compensation, and that is before the FLSA laws come to effect. And this is again from the US of A. FLSA mandates that the employer has to pay the worker time and a half if they're exceeding 40 hours during a given work week. In a day, we have 8 hours. That is the minimum hours, working hours in a day. And if we so exceed, we will be paid for overtime. Unfortunately, there are some employers who in the real life they did not practice that kind of like in payment of the extra hours in service. No, it's a case to case basis, especially when you're not employed in a structured business or in a structured company. Now, reasonable hours and compensation, that's one of the reason why we need labor laws as a way of protecting this reasonable hours and compensation. And of course, the very notable one is the discrimination prevention. It's always been a subject for in our civil rights. This is protected and enforced. And even though the Department of Labor is not involved in oversight, the laws do have an effect on employee and employee relationship. But as you all know, a business can't discriminate based on age, sex, gender, race, ethnicity, religion, and disability. So the same laws apply when it comes to paying wages. Okay. So if you want to learn more, you can check this out on laborlaw.com for more information on the federal laws and how that will affect us and you, of course. Now, let's move on to the decree instituting the labor code of the Philippines, and that is, we know, the presidential decree number 442. I have noted some of the articles here in that gazette. Article 3, the Declaration of the Basic Policy, the state shall afford protection to labor, promote full employment, ensure equal work opportunities regardless of sex, race, or creed, and regulate the relations between workers and employers. And the state shall assure the rights of workers to self organization, collective bargaining, security of tenure, and just and humane conditions of work. In Article 5, the rules and regulations. It is the Department of Labor and other government agencies charged with administration and enforcement of the labor code or any of the parts that shall promulgate the necessary implementing rules and regulations. And such rules and regulations shall become effective 15 days after announcement of their adoption in newspapers of general circulation. And in Article 6, the applicability, who is applicable persons with this labor code. All rights and benefits granted to workers under this code shall, except as may otherwise be provided herein, apply alike to all workers, whether agricultural or non-agricultural. And it was amended in the Presidential Decree number 570A. So again, if you want to check this out, there's an official gazette that you can look at the whole transcript. It's very lengthy, but it's worth it if you will wanted to pursue. If you want to be a lawyer, of course, you can check this out. Even if you don't want to be a lawyer, you can also check this out. Now let's talk about the employment relations in the Philippines. And yes, free trade has opened up to the Philippine domestic market to foreign goods. It introduced more players in the domestic market. So as a consequence, it heightened competition among industries for scarce demand in the domestic market. So there's a stiff competition that has forced prices of goods in the domestic market to fail. At the initial implementation of free trade in the middle part of the decade 1980s, yeah, I've researched that companies in that time were unable to cope with the heightened competition closed down. And so this resulted in a rapid increase in the number of unemployed workers in the country. So those who stayed were forced to implement adjustment measures intended to make more competitive. So in the Philippines, we have what we call the utilization of more efficient technology means that industries have to downsize or right size their operations. And we also have the use of a more flexible labor force that has caused an alteration of employment relations in the Philippines. And this thing that I have mentioned to you, this both have profound negative consequences in the areas of employment and labor relations. I'm going to explain this one by one. The utilization of more efficient technology means that industries have to downsize or right size their operations. So, this in turn entails dismissal of a substantial number of regular employees on grounds of redundancy. Because it's redundant, so we need to dismiss substantial number of them. So, the use of more flexible labor force has caused an alteration of employment relations in the Philippines. So, this is the picture, or the image that is presented here. Okay, you see that on your screen. At the center, these are regular employment, rigid employment. These are regular employees whose number is dwindling as a consequence of adjustment measures. So these are legally adequately protected employees, as may say. And the second level here in the big circle consists of employees covered by triangular or trilateral arrangements. So compared to the regular employees in the center, this type of workers generally they do not enjoy security of tenure. When you're working as a contract employer, you're not really enjoying that security of tenure because anytime or after that contract, you'll have to dismiss, diba? And the third or outermost level, this one, the yellow one, are the other types of bilateral employment relations. So this consists of home worker, commission paid, part-time, contractual workers, boundary workers, casual workers, and other similar employee groups. And compared to the regular workforce, this or those in a triangular or the trilateral arrangement, this one, they are most legally inadequately protected employees. Yeah, to the principle of labor laws. One I've shared here is the protection from discrimination. In the United States, the labor laws there is also one way of us that is generally the protection of employees from unlawful discrimination. Okay. And as I've said, businesses cannot discriminate in hiring practices, promotions, or hiring of employees, although these are inevitable because there are things that we cannot that happen really out of our control. And yes, that really happened. Compensation. The Fair Labor Standards Act is the federal legislation that applies to most employees in the United States, and the Fair Labor Standards Act says that employees must generally be paid a minimum wage, depending on which state they live. It also requires that employees who are employed on an hourly basis must be paid overtime, and if they work more than 40 hours per week. There's just the same rule in the Philippines. Also have to be paid if we exceed the minimum wage hours. And the minimum wage is exempt again from income taxes. That's one of exemption from the gross income. Now, labor unions. The development of labor unions has changed the way employees deal with their employees. I mean, sorry, this changed the way employers deal with their employees. Yeah. National Labor Regulations Act of 1935 is a federal legislation that requires businesses to hire members of unions to meet with union representatives so that they can negotiate on wages, working hours, and workplace conditions. Now, in the creation of a union, we also have, as employees, we also have a freedom to form unions to bargain collectively with their employees. To form a union, the employees must organize themselves so that at least 30% of the employees of the business agree to have a union. So their names and signatures of the employees will be submitted to the National Labor Relations Board. And the board will verify the signatures and they will hold a secret ballot vote for that employees to ascertain if a majority desire to have a workplace union. So if this turns out to be the case, then the employees are free to arrange their unions and to appoint representatives to negotiate with the business. And again, as repeatedly stated, as a business owner, it's very important to know about this procedure so that we could know to follow the law and to be amendable to working with unions to create a positive work environment. Now, I'll be telling you about the International Labor Organization. The International Labor Organization is a United Nations agency dealing with labor issues, particularly international labor standards, social protection, and work opportunities for all. It's a special organization of the United Nations that regulates labor relations. So at the present, there are 186 members. It was created in 1919 as part of the Treaty of Vauvenance that ended in World War. So this reflects the belief that universal and lasting peace can be accomplished only if it is based on social justice. Now we will get on the driving forces of the International Labor Organization. And these are security, humanitarian, political, and economic consideration, I mean. And also, it could be conditions as well. It does not impose sanctions on the governments because the ILO, or the International Labor Organization, registers complaints against entities that are violating international rules, but they cannot impose sanctions on the government because again we have differences. The governments are have their own discretion how to impose penalties, sanctions like that for its constituents. You might be asking, why do we establish the International Labor Organization? Well, that's for political. So International Labor Organization was established due to Russian and European revolutions in order to regulate and solve the problems faced by the society. So the organizing members decided to create an organization that would support social progress and foster peace between different social classes. And there's also social, of course. And whereas conditions of labor exist involving such injustice, hardship, and privation to large numbers of people as to produce unrest so that peace and harmony of the world are imperiled, and an improvement of those conditions is urgently required. So we have to take note of the social reasons and economical. The failure of any nation to adopt humane conditions of labor is an obstacle in way of other nation which desire to improve the conditions in their own country. So that those are the reasons why do we establish the International Labor Organization. Now, you might be asking again if there's a relationship between the Philippines and the International Labor Organization. Yes, of course. And the Philippines has become a member of the International Labor Organization. It was on June 15, 1948. 2 years we have gained after we have gained independence. In 1970, the International Labor Organization established an office in Manila. And through government, employers, and workers' partnership, the Philippines was the first country in Asia to participate in a pilot program on a decent work in 2002. So, what are the programs in International Labor Organization that are implemented in the Philippines? Okay. Oh, sorry. These are promoting decent work and sustainable livelihood, shaping a future of work through a human-centered development agenda, improving productivity and competitiveness of enterprises, developing skills and employability, especially the youth, ending the worst forms of child labor, formalizing and transition from informal to the formal economy, ensuring occupational safety and health, expanding social protection, promoting gender equality, upgrading labor market institutions and employment services, supporting ratification and implementation of international labor standards, and strengthening social dialogue, collective bargaining, and freedom of association, and building the capacity of workers and employers' organizations.
Thank you. This is Ma.Etheil, your reporter. Back to you, Evan.